Practical accounting. Number 11. Recording a business transactions on a credit basis. First, a quick reminder of the principles of double entry bookkeeping. There is always 2 entries of every transaction. Product and cash move in and out. The key is to follow the cash. Why? Because cash is blood to every business. Debit is in, recorded as DRN, credit is out, recorded as CR. The accountant will call a supplier a creditor. The credit buying cycle has 2 different activities. Buy and pay. The credit buying cycle is not complete until the cash is paid to the supplier. In a credit buying cycle, the product has come in from a supplier. The cash has yet to go out to the supplier. There is a time lag between product coming in and cash going out. Buying without paying is theft. Selling without collection is suicide. Buy. Stock book. When buying stock in, we record in the stock book. To keep track of the product coming in from the supplier to the store. Supplier's book. When buying stock in, we record in the supplier's book. To keep track of the product coming out from the supplier. Pay. Cash book. When paying for the stock in from the supplier, we record in the cash book, to keep track of the cash going out from the bank and into the supplier. Supplier's book. When paying for the stock that has come in from the supplier, we record in the cash book, to keep track of the cash going out to the supplier. The credit selling cycle has 2 different activities. Sell and collect. In a credit sale, the product has gone out. The cash has yet to come in. The selling cycle isn't complete. Customer details must be recorded to ensure future collection of the cash. Sell. Stock book. When selling stock out from the store, we record in the stock book. To keep track of the product going out of the store. Customer book. When selling stock out from the store, we record in the customer book, to keep track of the product going into the customer. Who has yet to pay? Collect. Cash book. When receiving cash from the customer, we record in the cash book. To keep track of the cash going in to the bank. Customer book. When receiving cash from the customer, we record in the customer book. To keep track of the cash going out from the customer and into the bank. The transaction is now completed. In a credit buy and a credit sell, the key is managing the time lag between the product going in or out, and the cash flowing in and out. Another business tip from learnaccountingfast.com. Next. The accounting process.